Welcome to Talk Tickers. Today, we are diving deep into Planet Fitness's Q3 earnings report. And let me tell you, this one sent some serious shockwaves through the market. This wasn't just a, good quarter. This was a statement. It completely flipped the script on how people are thinking about this company's growth.
So, how did the market react? Well, you can see it right here. The reaction was swift and decisive. The stock just skyrocketed, up a massive 12.6% on the day they announced. I mean, this isn't just a small win, folks. This was an absolute blowout. The kind of quarter that makes investors sit up and completely rethink what a company is even worth.
Okay, so to really get our heads around this huge move, we're going to break it down into 4 key areas. First up, we'll look at the raw numbers, how they flex their earnings muscle. Then we'll unpack the growth story. What's the strategy behind all this? After that, we'll talk about their guidance, which got a serious boost. And finally, we'll wrap it up with our take in the next call. So let's jump right in.
All right, first up, flexing earnings muscle. Let's get right into the headline numbers that caused that big double-digit pop in the stock price.
So look, the big thing here isn't just that they beat expectations. It's the size of the beat. They pulled in an adjusted earnings per share of 80 cents. Now, that's a whole 11% higher than what Wall Street had penciled in. A clean, significant beat on the bottom line like this, that is exactly what gets investors excited.
And hey, it wasn't just about the profits either. The top line, the revenue, was just as strong. They hit $330.3 million. That didn't just beat expectations, it represented 13% growth over last year. And that's key, right? It shows this isn't some company just, cutting costs to look good. They are genuinely growing the business. This table right here, it really paints the full picture of just how profitable they're becoming. Yeah, sure, revenue's up 13%, and that's great, but just look at the bottom line. Adjusted net income shot up a massive 22.5%. When you combine that with almost 7% growth in their same-store sales, it just shows a business that is absolutely firing on all cylinders.
Okay, so this is super interesting. That almost 7% comp growth we just talked about, where did it actually come from? Well, here's the breakdown. A whopping 80% of it came from rate, in other words, pricing power. The other 20% came from new members. So what does that tell you? It tells you Planet Fitness is successfully raising prices, flexing its pricing muscle, and people are paying it. They're not scaring customers away.
Okay, so that brings us to our second section, the growth story unpacked. The numbers are obviously impressive, but what's the actual strategy making it all happen? On their earnings call, management laid out a really clear, really effective game plan.
So, their whole strategy really boils down to these 3 things, and they all work together. First, exercising that pricing power we just saw. Second, making the experience better for members, so those higher prices feel justified. And third, getting smarter with their marketing spend. Let's break down how each piece of this puzzle works.
The Black Card membership, this thing is the absolute engine of their strategy. Get this, over 66% of their members are now signed up for this premium tier. And management feels so good about it, they're actually bumping the price up to almost $30. Now, to make that feel worth it, they're adding cool new perks. Think cold plunges, red light therapy, that kind of stuff. And here's the kicker. Their own tests showed this price hike is going to increase the average revenue per gym. That is a massive, massive lever for future profits.
Now let's talk marketing, because they're making a pretty big shift here. They're taking about $45 million that used to be spread out across all these local franchisee ads and pooling it into one big national ad fund. So why do this? The goal is simple. Run smarter, more efficient campaigns that are driven by data. The hope is that this lowers the cost to get a new member in the door and helps build a stronger national brand, one that's known for more than just being cheap.
And you gotta love this part. They are absolutely playing the long game. Their high school summer pass program, participation just jumped 30% this year. We're talking 3.7 million teens. But don't just think of this as some little summer promo. Oh no, this is a brilliant funnel. They're building a huge pipeline of future, loyal Gen Z members. Super smart.
Okay, all this great performance brings us to Section 3. Guidance gets a boost. Because look, having one strong quarter is great, but what really gets the market fired up, and what really justifies a big stock move, is when management shows confidence about the future.
And this is what really lit a fire under the stock. Management didn't just nudge their forecast up, they raised it across the board. But the real standout here? The adjusted EPS growth. They took their outlook from around 11 or 12% all the way up to a range of 16 to 17%. That is a massive jump. It signals that they expect profits to grow way faster than revenue,
And that, my friends, is the sign of a super healthy, scalable business.
So, what does this all mean for the stock from here? That brings us to our final section, the next call. This is where we put all the pieces together and give you our take.
Okay, so after digging through all of this, the stellar quarter, the strong execution, that robust outlook, our rating on this stock is a clear outperform. It's just hard to argue with it. The company is showing this powerful, durable combo of both growth and rising profitability.
So if you're an investor, what should you be watching for? Well, in the very near term, all eyes are on the Q4 results. Can they meet this new, higher bar they've set for themselves? Then, as we look into 2026, we're going to be watching that national ad strategy rollout. And of course, the implementation of that black card price hike. And then longer term, the big question is, can they actually hit those ambitious growth targets they've laid out for 2028? So, just to wrap up our outperform thesis, it really comes down to 4 key things. First, we think the market is still underestimating their pricing power. Second, they have a long runway to expand their margins thanks to that black card mix. Third, that Gen Z funnel we talked about, it's a powerful and defensible way to keep going for years. And fourth, and maybe most importantly, this is just a management team that is executing like flawlessly on a really clear plan.
All right, so for the next call, what's a potential surprise that maybe, just maybe, investors are missing? We think you should keep a close eye on member growth. Here's why. Management mentioned that the pain from their new click-to-cancel feature is finally starting to fade. But at the same time, a lot of those same people are rejoining. Now, if that trend continues, that headwind from cancellations could just disappear. And that could reveal a surprisingly strong number of net new members when they report next quarter. Something to watch.
And as always, we have to wrap up with the usual disclaimer. This analysis is for informational purposes only. This is not financial advice.